Hey YouTube, welcome back. So in today's video, I'm going to show you one of the most powerful patterns in trading that happens at a very predictable time. So let's dive in. All right, so here is gold on a 15-minute time frame. This was a setup that I caught just a few days ago. This was a beautiful setup. This is something that I talk about very frequently, and I wanted to break it down to really show you how powerful and effective this pattern is and how predictable it is at very specific times of the trading hours. So here on gold, we can recently see that we had a very strong push up. So we saw price have a massive expansion to the upside, and you can notice that it happened right in this maroon background here, indicating the London-New York Open that starts at 8 a.m. Eastern. So prior to that, we can see that price kind of had a big push down and then just moved sideways. One London session, we can see price pushed in below that level and showed a nice reaction, and then we had a pullback into this area, a little bit of a signature pattern in its own right, and then a strong push up. Now, this strong aggressive price action, this is what creates a lot of inefficient price action. So we can see a lot of imbalance here and here. And we can see the difference between this point here and this point here, right? Strong move up. This is 1, 2, 3, and then this little candle here, 4 candles. And then from this point down to this point here, we can see, right, this is completely different price action. This is very choppy, and this is, I mean, it's probably 50 or so candles between that same point A and point B. And that is what we call a flag pattern. So you will typically see these flag patterns, which will also help you with a directional bias. When you see a strong push up and then prices slowly coming back down, rebalancing that impulsive move before it continues up. So when you find flag patterns, it's a strong indication of price continuing in that direction, especially when it makes a nice double top like this, which becomes a target. This is what traders really like to see on the retail side, because that is indicating reversals for them. So we know this is a spot that is building liquidity. So I'm gonna mark that as a dollar sign indicating liquidity. So this is all happening when I am sleeping. So we can see Asian session coming back down and starting to rebalance this move here, taking this low. And then we get into London and we can see price aggressively jam back into this candle here, which was the starting point for this strong bullish move. So this is what we call a logical area. And that's basically just an area where we can anticipate price to give us an opportunity to take advantage of this setup if we believe that this is going to continue up from this flag. And that is where we can pay attention to a pattern here. Now, of course, this could have been an entry straight off this point here, but keep in mind, I am not in the office on my computer at that time. So that is when I dove into this price action here and started looking for opportunity. So the first thing I noticed here was this break retest level. I'm gonna mark that up here. So we can see this level here. And I'm gonna mark that here. And this could have been extended all the way over here. So we can see there's definitely resistance in this level here. So that is how a lot of retail traders are approaching the market. They are using these levels for opportunity. So for example, if price pushes here, that's selling for them. And they'll look for entry there with the hopes that price is gonna continue traveling down. If price breaks this level, they will either try to catch that by placing buy stops above this level, trying to catch the breakout, or they will look for that breakout, and then as price comes back down and now testing this area, using it as support, they will then look for price to continue to the upside. So that is the significance of these break retest levels. Now, we can also notice a couple other things. So I'm going to drop down from a 15 to a 5-minute time frame here. And we can also see this here. We have a trend line here. So we can see price is coming down, creating bearish structure inside of our 15-minute swing points. And this is almost looking like a flag to a bearish flag, where we can see a impulsive move, and this is rebalancing this expansion here, and we can see multiple touch points here. So again, traders will either use break retest levels, they will use trend lines like this or like this. And right here, this will indicate for some traders that this is a breakout and look for further downside. And if that's the case, in either scenario, we know above, I'm going to slide this over here, we know above this level here, these relative equal highs, that is where liquidity is building. So let me mark this up here. And that's really good to identify, because when we can identify liquidity where retail traders are accumulating orders, that is where we are primarily not looking for entry. Those are areas that we would, one, be targeting, or two, anticipating to be manipulated to then provide a way in, right? So a new manipulation candle or what have you. So we know that traders can be buying off of this trend line or selling off of this resistance, or here, this would indicate further downside, right? It broke this trend line, signaling that it could do some type of break retest like this, and they would look for further downside. In any of those scenarios, we know that there is a lot of money up above these highs. Anybody doing this break retest might be putting stop losses above this high or above these highs using that break retest level here. So that is what I was paying attention to when I saw this pattern. And what I really wanted to see was price to look like it was coming to the downside and then aggressively push up and attack this top side here. Now, when that happens, or if that were to happen, then it would give a new pattern, a new signature pattern that we could then take advantage of. And that is where I ended up getting an entry on this using the higher time frame targets up here, as well as some areas of imbalance. So we had some highs here and here. This was also another break retest level, and this was the level that I used right here. So that was my primary target, one of my primary targets. So let's play and let this price action unfold. And I want to see if you're able to spot it. So I just press play. I'll speed this up a little bit. And this is where I recognized that if we're going to see some manipulation, there is a really good chance now that we're in the overlap. This is when I'm also anticipating, right, more volume in the market is going to equal more volatility, and that is going to look like strong impulsive moves in the marketplace. That is when we can anticipate patterns to be created and or entries on patterns that are already created for us to enter in this overlap, anticipating strong aggressive moves. So let's continue playing this. So right there we can see it looked like it was flagging here, probably inducing sellers, and we can see price spiked up aggressively above these highs when we came into that New York London overlap. So let's continue playing. So we can see price starting to flag, and we can see there's a little bit of imbalance here. There's price right there. So we can see price came down and filled this imbalance right in here. And from there, we can see price push down and showed a strong push up. So I'm going to drop down to a 3-minute, and I want to see if you can spot the entry. Now, if you selected this spot here, you would be correct. That is what I was looking at here. So we can see a strong push up. So we can see there was a fake move to the downside. We can see money up here, and we can see other highs up here along with some imbalance. And again, we have the double top. So if we look at the 15-minute, this was a buy setup. So we had a strong push up, we had our rebalance, and this is primarily what we're looking for in this situation. But we weren't here to take advantage of this entry. So that's why we were looking for patterns here, because we don't want to be selling into these big candles here that produce those moves in the overlap. And that's where we were looking for a pattern. And then coming into the next overlap, that's where we're anticipating that strong continuation targeting these highs up here. So we can see a fake move to the downside, giving us a push up, and that would give us our signature. But then when we go to the 5-minute, 3-minute, we can see a really nice candle after price giving us a pullback, rebalancing this. Let me drop back to a 3 just to see it a little bit clearer. And we can see as soon as it came back and tested that area down here, a strong push up, giving us this really nice candle here. That was the entry. I'm going to mark this with that here. Let's throw our risk to reward tool on it. So that is our stop, about a 16 pip stop loss to the primary up here, just right under 1 to 5 risk to reward. So this was super clean. This is a time where we can anticipate these patterns, and this is when we can anticipate price to produce those strong moves. So let's drop back down to the 3-minute. We can probably keep it on the 5 just to keep the price consolidated. Let's press play here. So we can see right there, price pushed up, giving us a higher high. Now we can see price coming back down and testing that 5-minute, 3-minute candle here with this nice engulfing. That is where we would anticipate price to respect and push higher, especially as we can see as we came into the overlap that price was showing a willingness to go higher from our logical area based on what we saw in the 15-minute. So there is entry. Now we're looking for price to continue and show a willingness to come up and target those highs. So there price came and tested, showed a nice engulfing candle here, came back down, even tested that candle here before showing an impulsive move. This is that anticipated time frame, right? Now we're in that overlap. This is where these moves happen. This is when these patterns are created. And this is like clockwork. This is something that happens on all pairs consistently, and this is when we anticipate these moves. So there was the initial move running those highs, and we can see price went higher as well. This was a really clean setup and something that can be very predictable and just showing you how powerful these patterns are, especially at these times. So hopefully you got value from this video. You can definitely expect more videos like this in the future, and I will see you in the next one.